Good morning, everyone, and welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and thanks to everyone who helped out with that. So before we get started, I want to say that this webinar is being recorded, and we will send everyone an email later today with a link to the recording of the webinar and a copy of the presentation slides. We are delighted to be joined by Jas Jhooty from emTax for today's webinar. emTax was formed in 2012 to address the need in the marketplace for affordable employment taxes advice. Jas Jhooty is a respected authority on UK benefits and expenses matters. Jas has previously worked for HMRC as an employer compliance inspector and then for PricewaterhouseCoopers as an employment tax consultant. So welcome, Jas. We're delighted to have you with us for today's webinar. My name is Rachel Hines and I'm the marketing manager here at BrightPay. And also from the BrightPay team, we have Victoria Clark, who is the product development and training manager here at BrightPay. During the webinar, Jas is going to discuss how you can prepare for the upcoming IR35 reforms that take effect on the 6th of April 2021. And he is also going to explore how you can maximize the number of outside IR35 SDS rulings for as many contractors as possible to reduce business costs. When Jas has finished his presentation, I'm going to jump back on again to demonstrate how BrightPay caters for contractors who are inside IR35. We will have a questions and answers section at the end of today's webinar, where we will answer any questions that you may have. If you have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. So now that all the housekeeping is out of the way, I'm going to pass you over to Jas to begin today's webinar. So just bear with me here as I get the screens transferred over to Jas.
Hello everybody, I'm Jas Jhooty. Let's just start this off. Okay, now today's webinar I'm going to talk about IR35 reforms. Hopefully by the end of this you'll be more comfortable with your new obligations. So without further ado, let's see what's been happening. Okay, as we all know, the last minute in March 2020, the Chancellor decided to postpone the proposed IR35 reforms from starting from April 2020 to April 2021. Now, by that time, most larger employers had already introduced blanket bans on personal service companies. Mainly the big banks and insurance companies did this, and this actually turned out to be the incorrect approach. And it did lead to a talent drain where the best people decided, well, I am actually a true contractor who should be self-employed. And so they just went to find work somewhere else. And don't forget, going down this approach will actually cost you an awful lot of money, an extra 13.8% in additional Class 1 national insurance employer contributions. Now, fortunately, the latest news is that HMRC have promised to take a light enforcement touch this year. So for the first year, they're not going to penalize you if you happen to get an SDS incorrect. So they have basically they're providing you with extra time for the new regime to bed in. But with proper forward planning, which hopefully you'll get a lot of information during the course of this webinar, you should be able to keep a fair proportion of your contractors outside of IR35. Now, HMRC have estimated that there are 500,000 one-man limited companies out there, so-called personal service companies, and at the moment only about 10% of them are applying the existing IR35 rules. With the change in the obligation for payroll deductions to be made by the engager, not by the director of the one-man limited company, they expect 30% of these contractors to be caught as being deemed employees. Now, to keep the 2/3 or so outside of IR35, to keep them on the same basis as they're currently on, you will have to be prepared to change your contracts and also have a review of the working conditions. You'll have to make changes to how things have carried on over the last 20 years if you want to keep as many people outside of IR35 as possible. So now let's have a look at employment status and what the difference is between employees and self-employed people, because that's basically what you have to do. That's the assessment you have to do for IR35 reforms come this April. Now, if you're deemed to remain as being self-employed, then it's business as usual. You continue to pay their invoices. There's no further tax to pay. They're responsible for paying their own taxes and their own Class 2 and Class 4 national insurances. However, if the contractor is deemed to be an employee, then there's the additional 13.8% employer's national insurance that has to be found from somewhere. And obviously the the personal service company's invoice has to be subjected to payroll taxes. That's a net of VAT invoice, and anything that's deducted has to be reported via RTI using your payroll software system. So now let's have a look at the core employment status tests. Now, to assess someone's employment status, you need to have a look at the overall picture. You need to look at the various tests that have come into play over the years based on case law. So these cases have been taken to tribunals and the judge makes a decision. But the main ones, the core ones, are: is there a personal service expected from the contractor? So if they're allowed to send in a substitute, and they actually do send in a substitute, then obviously there's no personal service, so then the IR35 reforms will not apply. The next thing to consider is, has a mutuality of obligation arisen? Now, this is mainly due to time. If somebody has been, a contractor has been with you for a lengthy period of time, then it can be argued that a mutuality of obligation has arisen. They expect to keep coming in and finding work from you. You keep providing them with work and you keep paying them. The same as an employee. The next major test is in the element of control. How much control is being imposed on the worker? That is, what are they expected to do? How they're expected to deliver the services. Generally speaking, the more experienced the contractor is, they're going to need a lot less supervision, direction and control. Where the location of the services are, do they have to be on site? What hours are they meant to put in? All this demonstrates what amount of control there is. So a little bit more on mutuality of obligation. If the worker is deemed to be an employee, they have to personally perform at least some of the work. So if you can provide a substitute, if they can provide a substitute to deliver the services, then there will be no mutuality of obligation, and you, the employer, is obliged to pay them for that work. Now, HMRC have argued that as soon as you enter into a contract, mutuality of obligation arises. But generally speaking, if you've got someone in situ for over 6 months, then and they're working full time for you, providing you services, and they're not working for any other clients, then it's very, very likely that a mutuality of obligation will have arisen. So they're much, much more likely to be deemed to be an employee when you consider all the other factors as well. So the other factors you need to take into account is, what does the business look like? Have they got the trappings of trade? Do they have their own corporate logo, letterheads? Do they have a website? So do they look like a business? Then the next question is, who provides the equipment for the services to be delivered? If they provide all their own equipment, then it's much more likely to be self-employment. The next factor is quite important as well. What is their level of financial risk? So are they paid the same as employees every month, or do they sometimes have to take credit control action? What happens if they deliver the services which you say are not up to standard? Will you continue to pay them for them to put it right, or will there be a fixed fee so that they suffer a financial risk of not doing a good job in the first place? The other factor is, do they work for other people at the same time? So do they have multiple clients? That's very important if they're to be considered to be truly self-employed. And then another factor is, do they look like they are part and parcel of your business? So do they have any supervision, any supervisory roles? So they're managing your staff, are they invited to staff functions? Can you differentiate them from an employee? So all these factors have to be weighed up to see which side of the scales the contractor falls, whether it's truly self-employed or truly employed. So let's have a look at what the current off-payrolling rules are. So this is what's happening in the public sector, because the new rules that have been extended into the private sector don't come into play for another 3 or 4 weeks, not till the start of the new tax year. Now, IR35 was brought into play by Gordon Brown, of all people, back in 1999. And this placed the obligation on the contractor to decide whether or not they were employed or whether they were truly self-employed. And if they deemed that they should have been employees, then the majority of the income they earned from a particular contract should have had pay-as-you-earn applied to it. Now, obviously, as you can imagine, most contractors ignore these rules completely. So HMRC decided to test out the new rules on the public sector about 4 years ago. From April 2017, they made the public sector bodies, the fee payers, they made them responsible for deducting pay-as-you-earn and making pay-as-you-earn deductions from invoices presented to them by personal service companies. Now, HMRC have judged this to be a great success, and the main reason for this is that the public sector decided that the vast majority of the contractors should be employees, because they didn't want to have any element of risk of getting it wrong. And this has led to an extra £500 million in tax and national insurance being raised by the Treasury every year. So it's an extra £2 billion over the last 4 years. Now, originally, the extension to the private sector was billed to start in April 2020, but as I said before, because of COVID, this was delayed. But it was expected to raise over £1 billion per year. So with the Treasury being in the state it's in, it's very, very unlikely that they're going to postpone it any further. But you never know, because last year it's a very, very last minute. It was very late in March that they decided that they were going to postpone it, but I wouldn't count on it for this year. So in the public sector, the public sector body was to be treated as the fee payer, and if the contractor was deemed to be an employee, then the fee payer would have to deduct tax, national insurance and apprenticeship levy from the deemed direct payment, and that's basically the invoice net of VAT. Now, it's important to note that these contractors are not employees, they're deemed to be workers, and so there's a different set of rules applying to them. For example, auto-enrollment pensions and statutory payments like sick pay, maternity pay don't apply, neither do student loan deductions, and you can't set the employment allowance against any deemed direct payments that are made to contractors. So in effect, they were treated as they're being taxed as employees without any of the accompanying employment rights because they're not deemed to be employees. So this system is inherently unfair. So let's see what's happening in the private sector rollout. These are the changes, the extensions being made, coming into play in a few weeks' time. Now, the first thing to consider is, are you affected by these new rules or not? So the extension of IR35 reforms only applies to medium-sized and large businesses and current public sector bodies. So if you're deemed to be a small private sector business, and the definition of that is your turnover is less than £10.2 million, your balance sheet is less than £5.1 million, and you have less than 50 employees. Now, two of these above three conditions have to apply for you to be considered to be a small private sector business. Then these rules do not apply to you. So for you, it's business as usual. You don't have to make any assessments on the employment status of your contractors. You can continue to pay them without any deduction of tax. Just pay the invoices as they're presented to you. However, if you are a medium or large business and the public sector, then you will be deemed to be the fee payer. Now, that is the client to whom the services are being delivered. And in the first instance, the fee payer is responsible for deducting all relevant payroll taxes, including pay-as-you-earn, Class 1 national insurance and apprenticeship levy, from invoices presented to them by the personal service company contractors. And as I said before, that's the net of VAT. You still have to pay them the VAT so they can account for that to HMRC, but the net amount you have to put through the payroll. So you are deemed to be a fee payer until you make a status determination statement, until you make an employment status ruling on that particular contractor. We've gone back too far, I think. So the fee payer responsibilities can be transferred, and this is the case where you are using an agency for the contractor to provide you with services. So you, the end user, still have to make a status determination statement. So you need to make the assessment whether or not this person is truly self-employed or truly employed. And then you must pass this determination down the labour supply chain until it arrives at the subcontracted agency who ends up paying the worker. Now, if you fail to make a status determined statement, or if you haven't got evidence that you pass it down the supply chain, then the end user, the client to whom the services are being delivered, will remain the fee payer. So it's very important that you do these SDSs correctly and that you know the identity of the labour supply chain, or every step of the labour supply chain, so you can make sure the SDS goes to the relevant agency who are actually paying the worker. So the first thing you need to know is identify who the fee payer is, or who the actual body is who is obliged to make the deductions, because that's who you are passing the status determination statement to. And if it happens to be that this entity is based offshore, the fee payer responsibilities transferred to the next UK-based entity. So you should start making inquiries in terms of your worker who's actually paying them, because you may be using one of the big agencies, but they might be subcontracting down the labour supply chain to another agency. So these status determination statements, HMRC, that you have to take into account all the factors that I mentioned earlier, and you have to do this by taking reasonable care. So you can't do it quickly. You have to take into account all the different status factors that I talked about, like control, mutuality of obligation, personal service, etc. However, HMRC haven't deemed to tell you what reasonable care means, unfortunately. Once the statement has been made, the worker, who also gets a copy of this determination, has the right of appeal, and you, the client, have to respond to this appeal within 45 days. Now, you've got two choices here when you get to an appeal. Firstly, you can state that you feel the original SDS is correct, and if that's the case, you must provide full reasons why you are sticking to your guns. Otherwise, you may accept the new information that's been provided to justify the change in the ruling, and then you would issue a new SDS, a new status determination statement, and then pass this down the labour supply chain into the worker. Now, if you fail to obey the appeals process, if the client fails to obey this, then they will be deemed to be the fee payer. So they then become responsible for deduction of payroll taxes from the invoices, unless it can be proven that the worker or the agency who represents them have actually lied to get a more favourable ruling. If that is proven to be the case, then a transfer of liability to the worker will then occur. So basically, if the worker or the agent presents a fake picture, which you accept, and it turns out that an employee determination has moved over to a self-employed determination, then they will be culpable, not you. So what should you be doing now? You need to plan for these IR35 reforms. And the first stage is to set up an IR35 reform team. So I'm having trouble here. I'm sorry, the screen keeps jumping around. And what you should have, depending on the size of the business, obviously, you need to arrive at a few decisions. Firstly, you need to identify all your personal service companies, and this will involve a review of your supplier list. It's not just the people who you know are your contractors. You may be doing business with hidden personal service companies. So you do need to be able to prove to HMRC that you've gone through your supplier list, and from the information to hand, either a search on Companies House or a quick look on the web, you've determined that this is not a personal service company. And we have devised a questionnaire that someone in your finance department can go through all your suppliers, and as long as you can answer 2 out of 4 key questions positively, then that entity, that business, is not a personal service company, and so you don't have to do an SDS on them. Okay, the other thing you should be looking at is how you intend to generate these SDSs, because it's not going to be easy, unfortunately. So you need to work out what's best for your business. As I mentioned before, some large volume contractor engagers like banks have already decided to just move everybody onto the payroll. That's very expensive, and obviously quite a few contractors will just refuse to go down this route, and will go to other clients, smaller clients maybe, who are not affected by these changes. If you can, you may even decide to move the work completely offshore, because if the services are being delivered offshore, then IR35 doesn't apply. But if you can't do that, if you're not willing to do that, and if you want to keep your overheads down, you have to pick the best testing methodology for your business. And you should choose what's best for your organization. You should have contracts in place with your workers, and you need to review at this stage what's in those contracts. Then, as well as review of your contracts, you also need to find out what's happening on the ground. How are these workers being supervised? The project team leader should be able to tell you what actually happens down on the ground. So you have to look at the working practices, not just what's in the contract. And this is important because HMRC wants to be able to see if there are any sham clauses contained in the contract. So you do need to make sure that what happens in reality is being assessed, not just what's stated in the contract. Now, the tool that we recommend is for you to use HMRC's CEST tool. That's their check of employment status tool. And the main reason for that is it's the only methodology that comes with any assurance. HMRC says that as long as you haven't lied, as long as you've entered information correctly, then you have taken reasonable care and they will stand by the result. The other thing you need to ensure is that you have a robust dispute resolution system in place. You don't want to be caught out by not responding to the 45-day time limit to respond if a worker or the representative decide to appeal an SDS that they've received. Now, another thing to note here is that you don't have to agree to accept the appeal. You can stick to your guns, as I said before, and say the original SDS stands and there's no further recourse by the worker. That's it. They can't take it to a tribunal or appeal to HMRC. You have the final say as to what their employment status is going to be. And the final thing to consider in terms of SDSs is that it's not a one-off exercise. As well as your existing contractors requiring an SDS, every new contractor will also require one. So whatever system you decide to choose will have to be used on a continual basis. Also, some of your existing contractors who, for example, may only be taken on initially for a 3-month term, if they're still there in a year's time, then they have to be reassessed, because in the intervening period, what turned out to be a 3-month job is now gone into a 12-month or longer job. Then there's a very strong likelihood that a mutuality of obligation has arisen and the worker should be reclassified as an employee at some stage. Normally after 6 months, you should be reviewing existing contractors. So let's have a look at the different SDS methodologies out there. Which ones are available? Now, there are a few commercial SDS software outfits out there who claim to do a better job than HMRC. However, because they're not HMRC approved, the risk will remain with yourselves if HMRC decide that their result is incorrect. Now, some of these offerings may even come with HMRC investigation insurance to give you some kind of peace of mind. Well, we deal with a lot of these cases, and right, you may have your costs covered, but the amount of time these investigations take, that does prove to be very expensive. You will, some of these drag out for 2 or 3 years and take months and months of your time to resolve. So, and that will not be paid for. So it's a big risk if you're deciding to go down the commercial software route to get these SDSs. Now, some of you might decide, well, we'll go down the manual assessment, and this is something we don't recommend. You're unlikely to have the in-house expertise to be able to do this properly. A manual assessment, even if I was doing one, it will take a minimum of 20 minutes to do one. If I'm doing them day in, day out, and I do know what the factors are. I can't guarantee that the result I arrive at on Monday morning for the same set of circumstances will be exactly the same result that's going to be derived on Friday afternoon, because obviously you get tired. And also, as you may well know, employment tax consultants are particularly expensive. They're not cheap. So this is a methodology that we recommend we don't use. So what we do expect you to use, and what we recommend, is HMRC CEST. It's the second time I'll say this, and it's actually not bad now. It's got a lot more questions in there. It's free, and it's the only methodology that comes with any kind of HMRC assurance. So you need to get used to using this. And probably the people who are going to make the assessments will be the people on the ground. So once you've got your contracts reviewed, you will take it down to the project managers on site for them to make the assessments on the workers themselves, because they'll have a better feel for what's happening on the ground out on site. So let's see how we can keep as many of your contractors outside of IR35 as possible. So what you can do to improve your results. Now, the first thing most of you will have in your contract, well, firstly, you should have a contract in place. You can't use HMRC CEST tool without having a contract for services. So you do need to get contracts with your workers. With your contractor, should I say. Now, most of these contracts have very limited, they normally have a substitution clause, but the terms of how substitution is going to be invoked and used, those are not described in detail. So you definitely have to add more definitions in your standard substitution clauses. Things like you should state that the contractor is responsible for both finding and paying the substitute. Also that you, the engager, have to accept that substitute. There shouldn't be any implication that the engager has a right to interview the substitute, because that then implies a personal service. For a substitution to be valid, all that's required is that the individual is suitably qualified. Any individual should be able to provide the services as long as they're suitably qualified. And then if it's ever happened in reality, if a substitution has actually ever been allowed to occur, then in that particular business you can argue that the substitution clause is not a sham because it has been invoked and applied at some stage in the past. So that's important to keep a note of these as well. The next thing to do is to move over from a daily or weekly, monthly payment schedule to more of a project focus. And this is to mainly minimize the mutuality of obligation factor arising. And what you need to do is, if you've got a long project, you need to draw up contracts relating to each stage of a project. And what we recommend is that each stage should last no longer than 6 months. And at each stage you are defining a set of deliverables, what you expect the outcome is going to be during that 6-month project. Another thing which is very important is to remember that these contractors are not your employees, so you shouldn't be getting them to do anything that's not been agreed with in the contract schedule. So they should only be working towards what has been agreed in the statement of work. Another easy win to differentiate the workers from your employees is if you can't get away with paying them on an hourly or a daily rate, then in these statements of work, you say, well, we expect you to take X number of days, say 50 days to complete the project. Or hit a particular deadline, hit a particular milestone. then if they have exceeded this number of days and they still haven't delivered, then you can either stop paying them, say that's the maximum number of days we expect to pay you for, or stipulate a penalty rate. Say if you don't meet this deadline, we're only going to pay you 50% of the normal rate. And obviously you can't do this to an employee. You can't put an employee on half pay, no matter how much if I feel like you want to. You can't do that. You can't give them a 50% reduction in their earnings. So that is a big differentiator between someone who's employee or someone who's taking a risk by running their own business. A very important factor then is to alternate contractors to avoid having the same person sitting in the seat for every stage of a project. When you come to the next stage of a project, let go of the original contractor and bring in someone new. That will negate any possibility of a mutuality of obligation having arisen on the original contractor, because they have to go away and fend for themselves. You're not paying them for a period of time, because for the next stage of the project you brought in someone new. Similarly, you shouldn't have any exclusivity conditions in the contract. Now, some of you may be thinking, well, what's to stop them going away and taking our commercial secrets or licking our client base and going to a competitor? Well, all those concerns can be addressed by using NDAs, non-disclosure agreements, which are common in the business world. You shouldn't have those kinds of conditions stipulated in the contract. And then there should also be no restriction on who else the worker can provide services to. So they should be able to work for multiple clients in the same period. That's very important as well. You also need to avoid the worker looking like they are part and parcel of your business. They shouldn't be perceived as being part of your organization. So the main ways you do that is don't give them any equipment. They must provide their own. Obviously, if they're going to have access to your network, then you are allowed to give them a laptop for IT security purposes. A quick win here would be to give them a different colored lanyard than a normal member of staff. So, for example, when you've got your security passes to come into the building, employees may have a green colored lanyard, visitors would have a red one, and then contractors, you might give them a blue one, so that visibly you can see that they're not a member of staff. Make sure they have no staff management responsibilities. Don't invite them to any staff functions. And a big no-no, make sure they're not provided with any benefits in kind. They shouldn't be getting access to company cars, pool cars, vans, medical health. Those are only perks for employees, not for contractors. And the final thing here is make sure you're not providing them with any upskilling training. The only training they should receive is the mandatory health and safety training to make sure that they remain safe at the workplace. You shouldn't be providing them with anything that's going to give them more knowledge. That's up to them to fund themselves, because obviously they're in business in their own right. Other factors you should consider as well is to not be so controlling in terms of where the services are delivered. Obviously with COVID these days, most people are working from home, but even post-COVID, you should allow the contractor to be able to work off-site, either at their own home, also do their own hours. They shouldn't be stuck to the 9 to 5 that you might be imposing on employees. It's up to them how they manage their time to deliver the services. Similarly, you should also change the focus, if you can, from a day rate to an agreed fee for the completion of a set of deliverables or a stage of a project. Now, this you can stipulate that you can still take down a monthly retainer, but it just means that the contractor can actually make a healthy profit from this fee if they happen to do the work diligently, accurately, and quickly. You should also remove any references to minimum number of hours expected to be delivered, because that is much more likely to be considered to be an employment term within the contract. So change the focus to an agreed fee rather than an hourly rate. So what we recommend you do at this stage is have a look to reviewing your current contract and also your working conditions. Now, you do need to have contracts in place, and these should be reviewed and updated. What we find when we look at contracts is that most of these have common employment contract terms inserted into them, which means you fail at the first hurdle. And we here at emTax can review these contracts for you to bolster the self-employed aspects. So things you should watch for contracts is firstly, make sure you don't put the name of the worker in the contract because that obviously implies a personal service. The name of the business should be included in the contract. Don't put in any line manager, the name of a line manager, because that implies control. Make sure it's not open-ended, that there is a clear end date, and also avoid any lengthy notice periods. These aren't your employees. You shouldn't have to expect a lengthy notice period if you need to let this person go. Try to avoid stipulating a set address where you expect this services to be delivered. And then don't give them a job title. That's also another common mistake. You should include a description of services to be delivered. They should not have a job title. Also avoid any set working hours, and definitely don't specify any overtime rates. These are all things we've seen in so-called contractual services, which deem them to be employment contracts if these kinds of conditions are included in the contract that you're using. Next, you need to have a review of the working conditions. So your contracts are done and dusted, that's great, but you need to find out what's happening on the ground. Now, this is just as important as a contract review. Normally, this is completed by the on-site project manager, so the person responsible for looking after the contractors. Now, depending on the practices that get highlighted, once these questionnaires are filled in by the on-site project managers, we can normally come up with some new ideas, new ways of working for you to consider, and also to come up with an agreed template for a statement of work, which is basically describing what services are to be delivered at the back of the contract. Now, the statement of work concept is very important for you to get your head around. This is an addendum to be put at the back of each contract that the worker signs, and this will contain the scope of work pertaining to that stage of a particular project. And this statement of work will have a schedule containing the fee arrangements. Normally, we state that you should be paying a fixed fee on the completion of certain milestones. When certain tasks, deadlines have been met and the task milestone has been delivered upon, then they should receive a payment. Then also you need to detail timeframes for completion and what the expected outcome is going to be. So these statements of work definitely help you keep as many contractors off the payroll as possible. So finally, how can we here at emTax help you? Well, we pride ourselves as being the affordable employment tax consultancy, so we can help you with all aspects of IR35 reforms. You can purchase a due diligence checklist from us, and that is to be used to identify any personal service companies that may be hidden in your supplier list, because HMRC will expect you to have done this exercise to make sure you are providing, you are making an SDS for every single personal service company, not just the ones that you are aware of. then because CEST is most probably going to be filled in by your project managers out on site, and there's going to be various different people doing making these SDSs using HMRC CEST tool, then you need to make sure that that they are completing it with a common standard. So to ensure consistency, we have written the guide, which provides a lot more information on what the repercussions of answering questions are, a lot more examples, etc., and it's also very readable. So that's something else that you may consider wanting to get hold of. And then also you can use our services to get your contracts reviewed, updated, both bolstered, and also to see what your current working conditions are, so that we can advise you changes you can make to keep as many contractors outside of IR35 as possible. Okay, we're going to leave questions until the end. But I'll just leave our contact details there for you for a minute to take down. If you've got any want any further information regarding IR35, there's our phone number, and the main way you should get hold of us is by sending us an email to inquiries@emtax.co.uk. Okay, I'll hand you back over now.
Great. Thanks, Jas, for that. That was a really informative session. I know that I definitely learned a lot from that. So next we have part 2 of today's webinar, which is BrightPay's IR35 functionality. But before I get into that, I know we do have a lot of people on today's webinar that are not currently using BrightPay. So for those of you who don't know BrightPay, BrightPay is an award-winning payroll software that makes managing payroll quick and easy. At the moment, our products are used to process the payroll for over 320,000 businesses across the UK and Ireland, and we have been developing payroll software for almost 30 years. BrightPay has an impressive 99% customer satisfaction rate and a 5-star rating on both software advice and Trustpilot. BrightPay is a desktop-based payroll software, and it's available for both Windows and Mac. We do also have an optional cloud add-on called BrightPay Connect, where you can have online access to the payroll data, but the payroll itself is still processed on the desktop application of BrightPay. All BrightPay licenses include 10 activations, and this means that payroll processing is possible by up to 10 users or from 10 different locations. This is very handy if you have a number of employees working from home, all needing access to the payroll software. So I'm just going to jump into the payroll now. And as I mentioned, today I want to show you how BrightPay caters for off-payroll workers. Here I've set up a new employee, Isabel Flynn, and at this stage I have determined that Isabel is inside IR35. When setting the employee up on the payroll, within the Tax, NIC and RTI tab, you'll see there's a tick box here for off-payroll worker. So I can tick this so that BrightPay knows the employee is an off-payroll worker subject to IR35 rules. And when I click on this tick box, a pop-up appears for me to confirm that I want this employee to be marked as an off-payroll worker. And as Jas discussed earlier in the webinar, off-payroll workers are not entitled to receive or have deducted from their pay statutory payments, national minimum wage and national living wage rates, holiday leave entitlements and holiday pay, student loans and postgraduate loans, and automatic enrolment pension contributions. And this is why off-payroll workers need to be treated differently to normal employees in the payroll software. So by marking this employee as an off-payroll worker, BrightPay will automatically disable some of the employee's entitlements. So I'll click yes to confirm and save the changes. So you can see here that student loans and postgraduate loans are grayed out, where we can't use these options. And this is also the case with directors. And if I go into the Employment tab, the annual leave settings are also grayed out or essentially switched off for this employee. And you also have the option here to change the minimum wage profile to not entitled to a minimum wage. The two other employee benefits that off-payroll workers are not entitled to are statutory leave and auto-enrolment. So first, I'll go into the calendar to show you the statutory leave. And here in the calendar, if I click on the 1st of January, for example, you'll see that all of the statutory payments are still available to choose from. But if I choose maternity leave, an alert is telling us that Isabel Flynn is not entitled to statutory pay as she is an off-payroll worker. So I'm going to continue by clicking yes, and I'll add the maternity leave. So you'll see the maternity leave has now flowed through to the calendar. So even though they're not entitled to statutory leave, the calendar can still be used if the user wishes to use it for their own records to track this information internally. I'm going to go into the payroll now, and if I go to Isabel, you can see here that although we have added the SMP, it's not flowing through to the payroll as Isabel is not entitled to SMP. Lastly then is the auto-enrolment, and you can see an alert at the top of the screen for auto-enrolment. And rather than saying that the employee is an eligible job holder or entitled worker, for example, it is telling us that she should be marked as exempt. So rather than clicking through to the various options available, it's simply mark as exempt. Again, click exempt and confirm that we want to do this. And this will disable any automatic enrollment features that may appear for off-payroll workers. And although the user does need to manually mark employees as exempt from auto-enrolment, there's nothing really that can go wrong as it's the only option available for the employee. So I'm going to finalize my payslips now. And if I click into the RTI tab to preview the full payment submission, I can scroll down here to Isabel Flynn, and here we can see the EWSS marker on the FPS for off-payroll worker, yes. And this will notify HMRC that this employee is an off-payroll worker or inside IR35. I'm going to close out of here now, and as well as the employer or the client using BrightPay, the contractor can also use BrightPay to pay themselves by their own limited company. So here I've just kept the name very simple so that it's easy to understand. We have Isabel's own personal services company. And here Isabel is the only employee set up on the payroll. So the previous company was the company who engaged Isabel and hired her as a contractor. They had her set up on the payroll so that they can pay tax and NIC on behalf of Isabel. As well as that, the company would have also paid this company directly for their services. But now Isabel has to pay herself for that work. It was her company that got paid by the employer or the client, not her. So if I click into Isabel, because the tax and NIC has already been paid to HMRC on her behalf by her client, she is not eligible to pay this tax a second time. And to process this payroll in BrightPay, I can click on the spanner symbol here and untick the boxes PAYE tax can be deducted and NIC can be deducted. Or an alternative option is to add the pay through an addition. So you can add a new addition type, give it a name, so for example, salary, and once again, untick the boxes tax can be deducted and national insurance can be deducted. So that's it for the IR35 functionality in BrightPay. But I do also want to quickly look at the reasons why many employers and accountants are switching to BrightPay. So here at BrightPay, a lot of what we do and a lot of the features that we introduce are designed to make your life easier. So first is batch payroll processing. With BrightPay, you can finalize payslips, check for coding notices, and send outstanding RTI and CIS submissions to HMRC for multiple employers or clients at the same time. Next is integration with accounting software. BrightPay includes direct API integration with various accounting systems, including Sage 1, QuickBooks Online, Xero, Accounts IQ, Free Agent, Twinfield, and Cashflow. And this means that you can send the payroll journals from BrightPay to your general ledger from within BrightPay. BrightPay also includes furlough functionality, including a furlough pay calculator and a CJRS claim report. And this does include support for flexible furlough, which is something that many other payroll software providers do not support. We also have functionality to make the remote working experience as seamless as possible. As I mentioned earlier, all BrightPay licenses can be activated on up to 10 PCs, meaning payroll processing is possible for up to 10 users or from 10 different locations. We're also in the process of introducing improved multi-user functionality to reduce the risk of conflicting copies. There's an other users check and a latest version check when you open an employer file. With BrightPay Connect, we have online employer and employee portals. So if you're an accountant or a payroll bureau, you can invite your clients to their own online dashboard where they can submit payroll, approve the payroll, run payroll reports, view amounts due to HMRC, and so much more. You can also invite employees to their own self-service portal, which they can log into on an employee app to view payslips, view their leave, request leave, access HR documents, and again, so much more. Next is pay employees directly through BrightPay. And this is something that's coming in BrightPay 21-22. BrightPay's integration with Modular gives you a fast, secure, and easy way to pay employees through BrightPay. So it eliminates the need to create bank files and the manual workload associated with making payments to employees. All BrightPay licenses include free phone and email support, and we also have an extensive range of online help guides and video tutorials on our website. And finally, BrightPay is a payroll software provider that you can trust. So as I mentioned, we've been developing payroll software for almost 30 years, and our software is used to process the payroll for over 320,000 businesses across the UK and Ireland. We've won awards for Payroll Software of the Year in both 2018 and 2019. And in 2020, we won a COVID-19 Hero Award for suppliers. And this is as a result of our response to COVID-19 and how we have helped our customers throughout this difficult time. So I know we don't have time to show you this functionality during today's webinar, so I'm going to leave it there. And if you do want to learn more about BrightPay, you can book onto one of our free online demos. The demo takes roughly 20 minutes and it will cover everything that I just mentioned, plus how to run the payroll on a day-to-day basis. So it's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box and we will try to get through as many questions as possible. I can see a lot of questions have come in already today, and we have run slightly over on time. So I know we have hit the 1 hour allocation for today. If you are stuck for time, feel free to leave and you can watch back the recording again to listen out for your answers. But we will stay on for a little while longer just to answer as many questions as we can. So Jas, looking at the questions that are coming in today, I'm guessing that a lot of them are for you. But we do also have Vicky as well with us today who can answer any questions that are specific to BrightPay.
Okay, yeah, there's lots and lots of questions here, which is good. I'll try to run through as many of them as possible. If I don't get around to answering your particular question, feel free to email us at inquiries@emtax.co.uk and we will send you a direct reply. It's just, I haven't counted how many there are, but there's several dozen questions in here, so I'll do my best.
We will be sending out a follow-up email later today as well, so we will include that email address in the email so that people can have that email easy.
Okay, a common question is, do these employment status tests only apply to personal service companies, or do they apply to self-employed sole traders too? Well, the unfortunate news is that these employment status tests have to be done on everybody, whether anyone who's off payroll, whether they're a personal service company or a sole trader. With personal service companies, you're not going to be fined until April 2021. For sole traders, if you got their employment status incorrect, then HMRC can go back 6 years and say that you've done a miscategorization and that there should have been employees going back to either when they started with you or when or 6 years, and you'd be on the hook for having to pay 6 years pay as you earn on invoices that you paid. So that's not good news. So yeah, you do need to make SDSs for anyone who's self-employed as well if you haven't already done so. Let's have a look. There's a question here on who's responsible for making the SDS. It is the ultimate responsibility falls with the client who is getting the services delivered to them. Despite what your agency may say, or what they say they will do on your behalf, it's your responsibility for making the SDS and passing it down the labour supply chain. Somebody's asked the question, what happens if I've got an employee? As long as it's a genuine employee, not your spouse, you are seen to be operating a business in your own right. So you're much more likely to be considered to be truly self-employed. So your SDS should come out with you being off payroll. You still require an SDS unless when the person in finance is going through our due diligence questionnaire, that they're satisfied that you look like a legitimate business, in which case you will not require one. You still need some kind of check anyway, that somebody has checked your status at some stage. Somebody's got a question here, which is Jackie Boakman about a domestic care company. I think if you were to email me this, I can have more time to look at it. I'm just racing through these at the moment. Carrie Walker's got a question about a truck driver who you use only once a month, but you do provide them with a truck. If it's a one-off, that should be okay, as long as you're not providing them with equipment all the time. Then, well, there's ways around that as well. You can charge them rent for using your truck. I know it sounds a bit weird, but it just saves them having to go out and getting their own truck to deliver the services. So there are ways around it. As long as it's a one-off, it shouldn't be too much of an issue. Another common question is what happens if the contractors are based overseas? Then you have no issues then. If they're delivering the services from overseas, then IR35 rules will not apply to them. So that's good. Another common question is, do does anybody who's deemed to be an employee, do they receive the old 5% expenses deduction? I'm afraid that's gone out the window under the new rules. If they're deemed to be an employee, the full amount of their fee on the invoice will be subject to pay-as-you-earn tax. That 5% has disappeared now. Let's have another look. Someone's asking a question about having 110 employees and a turnover of 4 million, balance sheet of 1 million. You will not be affected. That's Diane Hobson. You will not be affected by these rules. You are deemed to be a small employer. Let's have a look.
Jas, there's a few questions coming in here for BrightPay. If you want, I can ask Vicky these few questions and it'll give you a chance to look through them as well.
Okay, sure.
So yeah, one of them here is, I have a single BrightPay license, no cloud add-ons. Can I also download the software to a second laptop? And if so, how do I go about that?
Yeah, we'll give Jas a little break just to look through all the questions there. What you need to do in that instance is just simply pop to the website and download the software to your second laptop. There's then a couple of ways of getting your information across. So you can do it manually. Say you could save a snapshot from your existing setup onto onto a USB key, something external, bring it over to the second laptop and restore in. Alternatively, if you want kind of shared access between the two, I suppose, laptops, PCs, whatever your setup is, you can maybe then save your employer file to a cloud environment or somewhere that's accessible really from both locations. Okay.
Brilliant. There's another question here then. With BrightPay, you can bulk file RTI each month. In other words, file around 180 companies with one click rather than having to log into each one. Can you confirm this?
Yes, that can be done. So there is a batch operation menu via the Open Company screen, and it allows you to batch process your RTI submissions.
Brilliant. We currently use Sage Payroll for a majority of our clients. Could you let me know how we can migrate data over to BrightPay?
Yep, so we do have a migration process for, I suppose, transferring, your company and employee details from Sage into BrightPay. We also have a dedicated migration team that can help with this as well. So maybe Rachel, somebody can follow up with Esther directly on that one.
Brilliant. Jas, will I pass it back to you again?
Yes, of course, yes. I'll start running through these. Some of these are quite long, so if you don't mind, I'll skip these. And if you could just email us afterwards, I will definitely get back to you. Okay. Let me see. Someone's asked a question: is if someone's on site for 2 to 3 years, are they more likely to be a contractor? Well, unfortunately not. It's almost definite that a mutuality of obligation would have arisen in any period over 6 months. So it'd be difficult to argue that they're not an employee. A next question from Brian Oak. Has said that there's been a lot of commentary about how HMRC's CES tool is flawed. It's not perfect, but it's the best of a bad bunch. And in fact, the latest iteration isn't bad at all. It actually does cover mutuality of obligation, which is something that it was highly criticized for. If you were to get hold of our guide, you will see there's about 35 questions now, which do a good job of getting the employment status correct in 80% of cases. So that's not bad. So it's a lot better than it was previously. Recurring question is people working overseas. I'm not going to get the ins and outs, but basically, if the services are being provided overseas by overseas contractors, then that's not within IR35. Another question, similar one. Several clients, PSE clients, have been working with the same people for several years. Yes, it's very likely that a mutuality of obligation will have arisen, unless you can prove that there's been significant gaps in them receiving any income. So they may be there for, say, 6 months, but then they go away for 2 years, work for someone else, and then they can come back. That's not a problem. As long as there's gaps in engagement, then you're okay. If there's been no gaps and they've been with the same client for a number of years, then it's almost definite that they are going to be deemed to be employees. Another question, can contractors come back after 3 months and keep rotating every 3 months? Yeah, because mutuality of obligation only arises if the contractor becomes reliant on you and you become reliant on them. So if they're going away for 3 months, not on holiday, but if they're going away for 3 months and they're getting work elsewhere, so they have to fend for themselves, then it can be successfully argued that there's no mutuality of obligation. So as long as there's gaps in engagement, you should be okay. Question on retention, if you can email me that. 5% expenses, that's no longer allowable. Somebody's asked a question, can the milestone be the submission of a monthly timesheet? Unfortunately not. You should avoid using timesheets or any of your own systems for either invoice generation or payment. They should be using their own systems to calculate what's due. If they're using the same as what employees use, for example, submitting monthly timesheets, they're much more likely to be employees. A few questions on CIS deductions. This is a common misconception that if somebody's on CIS, so they're getting the tax deducted at source, you still need to make an SDS to see if they're truly self-employed. This is something that most contractors who use subcontractors tend to avoid. Now, how prevalent this is going to be in terms of HMRC's investigations, they haven't investigated for donkey's years, even though it's always been an obligation to work out whether or not the subcontractor in the construction industry should truly be an employee or not. Someone's asked a question about having an annual contract with a particular client. They work as a bookkeeper. Now that should be fine, because I'd imagine you have, this is Nisa Reed, imagine you have more than one client. If you've got multiple clients, obviously you may have an annual contract, you go in regularly, do the books, etc., once a month, etc. As long as you've got multiple clients, you are going to be deemed to be in business in your own right. So in that case, longevity doesn't matter. That just means you've got a lot of clients on board.
Jas, I might jump in here again.
Yeah.
There's another couple of questions coming through for BrightPay.
Okay.
On BrightPay, will the starter checklist option of ABC still remain, or will these not be used?
Yeah, that's a good question. Yes, so basically what you need to do is treat any, I suppose, off-payroll worker as any other starters. So you will give them the starter checklist to fill in, and then use that starter checklist to determine, I suppose, A, B, or C. So HMRC are basically saying it's more than likely going to be declaration C, which will then put them on tax code BR. Failure to complete the starter checklist then would lead to the 0T tax code. But in most cases, yeah, they are saying it should be statement C that's chosen.
Great. And how do I save my last year information in BrightPay and go back to it every time I need it?
There's nothing really to do with your last year's BrightPay. It will always remain on your PC until such time that you choose to manually remove it. So when we do release 21-22 BrightPay, that's going to install separately, but you will still have access to your 2021 BrightPay as well. Now, of course, we do recommend always taking a snapshot, or taking backups really of your data, just in case anything happens to your PC.
Great. And do you have a date for when the BrightPay 2022 will be ready for release?
We are saying at the moment we don't have a specific day, but it's week commencing the 22nd of March. We would envisage it will be earlier that week rather than later in the week. But at the moment, we just still need to decide on a definite day.
Brilliant. So just one other comment that's come in here from Richard. Thanks for the presentation today, Jas and BrightPay team, really helpful. So I think we will finish up there for today. I know there is still a lot of questions that we haven't got to, but we will include Jas's email address in the follow-up email later today if you do need to ask any further questions. I know there was a lot of duplicate questions coming in there as well. So as I said, we will send out the follow-up email and it will include a link to the recording of the webinar as well and a copy of the slides from today's webinar. But that's it from us. A massive thank you again to Jas for presenting today's webinar, and thank you to everyone who joined us for the webinar. We hope you found it useful. Thank you. Bye.